Welcome back, everyone, to the Schaefer Stock Market Podcast. This is Josh Selway talking to you again. I am an editor at Schaefer's Investment Research. For those of you who have been listening every week, thank you so much. If you're new to the show, these are just quick podcasts to get you in, out, and on your way, giving you brief updates on what's been happening on Wall Street, what we're looking at over at schaefersresearch.com. So wherever you're listening, if you could subscribe, review the show, give us some positive feedback or negative feedback if you want us to improve on something, that's always welcome. Well, not always, but sometimes it's welcome, I guess, if it's helpful criticism. Anyways, we're going to start this week's show off with just a quick look at what's been happening in the markets overall, because there's been a lot happening. We got to start with the Fed. The Fed kept interest rates unchanged this week. Wall Street is now expecting the Federal Reserve to cut interest rates, though, later this year, which has sparked an upside move in the markets, with the Fed taking potentially a more dovish approach going forward, which should be more accommodative to markets, is the thinking. But that helped send the S&P 500 index to new highs. The Dow is trading near new highs. Stocks have been rallying higher. We actually just did a study over on Schaefer's Research about the rally in the S&P 500 index and how much it shot up in just the past couple weeks. And that was interesting to look into there about what traders could expect going forward after that type of rally in the S&P 500 index. But of course, besides the Fed, there's been a lot happening elsewhere as well. We have this situation with Iran, which is extremely interesting, we'll say the least. We'll just continue to use that word because just a lot of mixed messages here. There were reports, of course, about Iran potentially bombing tankers in the Middle East, and then we just had reports that suggest Iran shot down a U.S. drone as well. And then reports are saying that the U.S. was going to retaliate and launch a strike against Iran. But then President Trump at the last second changed his mind, and he just tweeted this morning that he changed his mind because a general told him that there were going to be roughly 150 casualties, and he couldn't do that since the drone strike did not kill any U.S. servicemen or women. So that's where we stand now. All of this geopolitical tension has caused oil prices to rise. Obviously, we have this tension in the Middle East, and anytime some conflicts pick up there with the U.S., you see this change in oil prices. And not only that, just today we had this explosion at a refinery in Philadelphia, one of the largest on the East Coast, apparently. So we're monitoring that as well, and that is sending oil prices higher today. And along with oil, we can touch on commodities a little more here and just mention this move in gold. Gold is not something I personally track very often. I'm more looking at companies and businesses, but it is worth mentioning that gold has been rallying, and we wrote about that over at schaefersresearch.com and about how options traders have been betting on more upside in gold. So if that's something you're interested in, we do have some blogs about that over on the website, so make sure to check that out as well. And looking ahead to next week, we have the G20 meeting in Japan. The G20 meeting is just this gathering of leaders from 20 of the coolest countries in the world. They all get together, shake hands, take pictures. They go behind closed doors to talk about who knows what, big important things. And the big takeaway here is that President Donald Trump is supposedly set to meet with the Chinese President Xi Jinping, and hopefully traders are looking for them to provide some type of clarity on a trade resolution, a trade deal between the U.S. and China. We will have to see. I say it every single week. I'm not venturing any guesses either way because this has been all over the place. You have Trump administration officials saying that President Trump will be more than happy to place more tariffs on Chinese imports. So maybe we'll get some clarity from that meeting next week, but probably not, and we'll just be left with more uncertainty going forward and more sudden changes as we've grown accustomed to. Moving on, pressing pause for a second on some of the news-related stuff I want to talk about. I wanted to first look at this study we just ran here at Schaefer, specifically from our senior quantitative analyst, Rocky White, who's always putting out great stuff. And this was in our indicator of the week this week, which comes out every Wednesday morning. And this week, Rocky was looking at some of the best stocks to target for options trading. Obviously, that's what we specialize here at Schaefer's Options Trading. Been doing it since the 1980s. We're actually just celebrating our 38th anniversary this year. So this was an interesting study that Rocky did here, where he looked at some of the stocks that have brought the best returns for options traders in the past year. But before he gave that list of stocks that have been the best targets for options traders, he did a brief breakdown of how different stocks can give different returns for options traders, and how it may not, if you're not too familiar with options trading, you may get the wrong idea about which stocks can be the most profitable for options traders, because people always think the most volatile stocks are the best for options traders because they have these big swings, which is often the case. That is true. But what really matters is what is being priced into the options. And you really want stocks that make much bigger moves in either direction than what the options market is expecting. Now, that's easier said than done. But he gives a good example of two different stocks in the indicator of the week, if you want to go check that out, and how just based on the stock returns, you may guess that one stock had better options returns than the other, but that's not always the case, because implied volatilities make a huge difference as far as option trading goes. But I just wanted to call out a few of the names that have the highest average return for their options in the past year. This was an interesting list. Rocky was very thorough in his research here, gave a lot of different names. And at the top of the list, may not be too surprising, is AMD, Advanced Micro Devices. That is the very popular chip maker. Is always one of the most popular tickers on our websites, a website that readers like to read about. Its options have averaged a return of 74% in the past year. It's at the very top of the list. Another name that stood out here was Chipotle at 54%. Those may not be too surprising because, like I said, they've both been stocks that have made big moves. Chipotle just keeps going higher, essentially. AMD has been a little bit in both directions. It tends to be a volatile stock. But further down the list, one name that stuck out to me was Procter & Gamble, blue chip. Again, maybe not a name most people suspect that would be on here because being a blue chip, typically not seen as a very volatile stock. But again, this has more to do with what the options market was pricing in. So it was likely that they are pricing in small moves for Procter & Gamble, and the stock made much bigger outsized moves than what was expected. So that landed Procter & Gamble on our list for the stocks with the highest average options return in the past year. And Rocky also had a couple other tables here. Again, this was a really interesting study. I highly recommend you check it out if you're interested in options trading. He also had stocks with the highest percent positive and stocks with the highest percent of options that doubled. So that's what we're usually looking for in a lot of our options trading services, which you can check out on our site, is a stock that can provide options that will double in value. And we have a list of the names that have been the best at supplying those type of returns over the past years. Going back to the news front here, the biggest story I want to talk about from this past week were these reports that Apple could move the production of some of its products outside of China. So this is extremely interesting to me. I've talked before about how Trump, many suggest that his angle here for tariffs partly is to maybe force some companies to take their manufacturing and production out of China and other areas that he's placing tariffs on. And it's interesting to see these reports that Apple is considering that. They're reportedly talking to some of their suppliers to see the cost and other effects that it could have to move some of their manufacturing and production outside of China. The iPhone maker just this week sent a letter to the Trump administration laying out how the tariffs on China will negatively affect the company and limit its impact to the U.S. economy, and it says impair its ability to compete around the globe. So while Apple is obviously hoping for some type of resolution between the U.S. and China on the trade front, it's also taking steps to put more power into its own hands to reduce the effects of these the tough relationship right now between the U.S. and China. So it's interesting to see them potentially moving some production outside of China. And you had analysts at Wedbush earlier in this week come out and with a note that said that Apple could move 3 to 5% of its iPhone production to India, but that could take over a year, up to a year and a half, maybe 2 years, the analyst there said. Either way, Apple stock right now is trading at a notable area on the chart, specifically trading right at the $200 level. I'm looking at the stock right now, and it's being quoted right at $200 per share. So the stock has been on the rise in recent weeks after bottoming right near $170 near the end of May. Now, I want to hit on a couple consumer staple stocks here because this isn't a group I look at very much or talk about very much, except in the fact that in like 2017 going into 2018, what we really were looking at with these stocks is the high level of short interest that were around them, specifically around packaged food stocks in particular. Like Campbell's Soup, General Mills, and a bunch of other stocks in that group, they are all seeing this huge increase in short interest. And this comes as a trend I talked about before, this healthy eating trend. Certain stocks like Weight Watchers, Planet Fitness, they were all seeing a lot of buying activity. Their stocks were doing well. Weight Watchers has since fallen off a cliff, but that was a trend for a while. And it's interesting that Weight Watchers is now pulled back significantly, and some of these stocks are now rallying. And what I'm looking at here is General Mills stock, ticker GIS. It's had a big year in 2019. It bottomed around $37 in December, and it's rallied all the way back up to around $54 per share. It's trading near 52-week highs just today. And we were doing some research on the stock, and we were looking at some of the data around it, and it was suggesting that General Mills here could have more upside based on some of the signals we were looking at. That was in it. It just bounced off its 100-day moving average, which could be support. So there may be some more upside here for General Mills as it tries to recover from some of the losses it's encountered in recent years. And one of the things we were looking at with that stock is our Schaefer's Volatility Index, which essentially is showing us the volatility around priced into near-term options, and right now that is a very low reading, suggesting it could be a good time to pick up premium on General Mills options. And a sector peer who has continuously moved higher in 2019 is Hershey, ticker HSY, the chocolate giant. Its stock chart in 2019 has done nothing but go higher, and it's right now trading around $137 per share or so. It dipped briefly this week after Piper Jaffray downgraded its rating on the shares to underweight from neutral. So essentially a sell rating here from Piper Jaffray, which essentially said that the stock's valuation is too high compared to its sector peers. It's worth noting here that almost every other analyst that's covering Hershey stock has just a hold rating on the share. So even though that they're trading near fresh highs, most analysts have yet to come around. In fact, as I just said, Piper Jaffray is coming in downgrading the stock. So it's been a big year for Hershey, but still not a lot of believers on Wall Street. Couple other quick hitters here. Another name that was downgraded to underweight was Energizer, ticker ENR. That is the battery giant, the Energizer Bunny. That stock was cut at JP Morgan Securities, and it's just part of a longer-term downtrend for Energizer, which has really struggled. The shares hit a 3-year low around $38, and they fell sharply on that downgrade. And since about the summer of 2018, they're trading in the mid-60s, and as I said, they've fallen below $40 per share. So a rough run there for Energizer stock. On the IPO front, we had pet supplies retailer Chewy, ticker CHWY. They just went public last Friday. They had an IPO price of $22. They opened at $36, and on that first day, the shares traded up above $41. They moved lower since, though, last seen trading around $32.77 per share. And we highlighted just the other day the options trading activity that's just started up on Chewy. If you want to go check that out to see how options traders are positioning themselves on that stock during its first day of options trading. And of course, we had Slack go public this week. Slack Technologies, ticker WORK, WORK. That is the company that provides easy-to-use team messaging platform online, collaboration tools that make it easier for people to work together. It went public on Thursday, opening for trade at $38.50 per share. It was last seen right around $38 per share. And the big news here was that Slack went public with a direct listing instead of an IPO, which is what Spotify did last year. It's very interesting to look at the differences from there. I'm not an expert on that. I read up a little bit on it, and many are speculating whether this is a growing trend of among technology stocks. There's talk that Airbnb, the hotel and home rental giant that's supposedly going public fairly soon, they could be considering a similar approach to going public. So we'll have to see. For Spotify, the shares are trading below where they went public last year. Maybe Slack can have a bit more success with their direct listing going forward. But that's it for this week's episode of the Schaefer Stock Market Podcast. We'll be back next week with more updates on what's happening on Wall Street and the financial news industry. Until then, make sure you check us out on Twitter, StockTwits, Facebook, Instagram, wherever you want to find us. And again, please subscribe and review the show. I really appreciate it. Lots of positive feedback so far. But until next week, again, I am Josh Selway. I will talk to you guys soon.